The big story, I think, for this week is there are two IPOs that I'm watching. Well, okay, I'm not gonna lie. There's only one IPO I'm watching. It's Coinbase. Its total private market valuation is around $68 billion right now already. It's gonna price at $200 a share. They're trying to offload a shitload of shares, creating a valuation probably around $100 billion. It's valued pretty heftily, but personally, I like Coinbase a little bit more than Airbnb and Dash that were super overvalued when they IPO'd and just continued to run. I think it's worth looking at for the upcoming week just in the hype alone. Coinbase has a lot of hype. Just the hype alone can push this stock on Coinbase. We don't know where it's gonna open yet. Ticker symbol COIN. It's expected to open around $200 a share, but I don't know, because I tried to buy the Snowflake IPO around $90 a share, and then when it fucking IPO'd, it was for $220 a share, and I'm like, yo, Frugal Tiger here is just trying to make a quick buck. All right, we'll see where it opens at. I have a feeling it could open a little bit higher, and I'm actually gonna watch it during the trading day. It's just a name with a lot of hype. Everyone's obsessed with Bitcoin. And this is just another way to make money in the whole cryptocurrency space. Keep in mind, IPOs don't always go on the anticipated date. As of right now, it looks like it is going to be the 14th with ticker symbol COIN. Pay attention to it. It's going to be a huge IPO. Anyway, that's my big rant of the day. Do I think it's overvalued at 100 billion? Most likely, but that didn't stop DoorDash or Airbnb from running higher. Right now, this market is just overvalued like crazy, and you just have to keep that in mind when you're trading these fucking ridiculously overvalued stocks that one day this rug can be pulled from under you. So just keep that in mind, guys, all right? A little drunk right now. I'm not high, just drunk, okay? This week, I'm actually drinking... These fuckers put the label upside down. Stone Tangerine Express. Ugh, you guys can't even read that. I can't flip it over. I already started drinking and I'm basically drunk. The other IPO I'm watching is AppLovin. I honestly don't know jack shit about this company. The only reason I'm bringing up AppLovin is it kind of reminds me of the name McLovin from the movie Superbad. And that was a great name. That was a great character. Yeah, watch AppLovin. It's gonna also IPO this upcoming week, and hopefully it does well. Anyway, let's go into the upcoming tickers that we need to go over for this trading week. We already talked about Coin on the 14. Definitely watch that for the rest of the week after that. I want to go over really fast the names that are moving. You have to watch Snap. I mentioned it a few weeks back. I don't reiterate it if it flattens out, but you gotta keep your eye out on Snap. You gotta still keep your eye out on Twitter. If you guys bought Roku, I talked about it last week, but it's actually still breaking out after it dipped to 300. It's back at 370. It might make a run for the 400. We'll see. And MongoDB is making another run up. Okay, so still watch Chewy. Penn is a funny thing because although I'm biased towards the name, it's also a very great name to short. I just feel like when you're watching the charts, the tape, the overall buying and selling, for whatever reason, it's very easy to time when Penn is gonna drop for a few ticks or a few handles. I think if the market continues to run higher, and that's the key thing, Penn is gonna do well. And this is the one other thing I kind of want to mention. I'm mentioning these tickers as potential moves to buy. I don't necessarily talk about that much of names that I would short. These are names to buy, but if the market drops like a rock, all bets are off, you guys. Like, no matter what I feel about these names, they're gonna go down. And they're probably gonna go down even harder than the actual stock market itself, the overall S&P 500, Nasdaq, or whatever. So when I mention these names, these are names that you play on the momentum side, but if the market turns around, these names are gonna go down faster than the market. I just thought I'd put that disclaimer out there because I realize that, the majority of my audience is actually very intelligent. They ask very intelligent questions, leave very intelligent comments, but not everyone knows this shit, and I can't always assume it when I'm ranting the way I rant in these videos. So just thought I'd throw that out there and mention that now. Market goes down, all bets are off. My overall take on the market is it's overvalued, which is why I'm feeling like I have to be super nimble. I am actually, although I am not short the market right now, I am preparing for a bear campaign. But the timing of this needs to be done pretty well. I still have lots of positions on, just not in tremendous size. Anyway, Penn and Square Square's the next stock I want to talk about. It's still moving higher. I think it's a great name. And Square, just so you guys, if you don't know a lot about the company, it provides like a point of sale type business, similar to like you can put your credit cards and other things in. It's great for the small business environment, and I think the charts themselves are moving in a very positive direction. Keep in mind, in a down market, this thing is going to get its face ripped off. But right now, the tape is moving higher. You might want to join in for a few ticks, as long as you're nimble enough to sell later. Also, watch CCL. I mentioned this a few weeks back. It is breaking higher now, 29. It is a recovery play, and I feel like it can push higher if we get, a smooth reopening that continues to grow. And I feel the same way about AMC. I know I mentioned I sold all my AMC at $13 a share. I had quite a bit of exposure to AMC, I'm not gonna lie. One day I woke up and I'm like, what the hell am I doing, man? I have like 5,000 shares of this stupid movie theater company that no one goes to. But I actually bought AMC again, much smaller size. I picked up just 1,000 shares when it dropped to $9.50, a reopening trade, just because I want to support my fellows at Wall Street Bets, all right? Some good people out there just trying to make a quick buck, just like Frugal Tiger. I gotta help them out. Those are the names that I kind of want to mention, of names that are moving, that I'm watching. One of the names that I'm preparing on my short campaign is Peloton. I actually am not short the name now. I was short the name a little while ago. I day trade the name to the short side periodically. But remember, guys, it's a fucking exercise bike with a TV attached to it. I can build one right here in my tiny ass apartment. Don't be fooled by the red lights. Frugal Tiger is actually a very clever engineer, and I can put together that piece of shit Peloton bike, all right? Let's move along. So we have, so I got my ass beat this last week. So I mentioned this last week that I was preparing a trade in Tilray and Aphria. I think my cost basis in Tilray was $23 a share. I added just a tiny bit to Tilray, but I didn't double down my bet or anything like that, and Aphria. So Tilray is essentially a binary gamble. And what I mean by that is it's either gonna get cut, it can easily get cut in half again, or if this merger between Tilray fuck me, and Aphria go through, it could pop to $40 a share, just for the same reason I think Coinbase is worth a trade, just because a bunch of retail as well as other types of speculators might want to get in on this trade at that point in time, pushing the price up. Anyway, right now I'm hosed. Like I said, my cost basis was on Tilray was like $23.50 or something like that. It's at $19.51. And it sucks to be Frugal Tiger, but if you guys have realized one thing from watching these videos, is it always sucks to be Frugal Tiger, okay? I feel like you guys watch these videos just to feel happy about your own life. And I do what I can, okay? I do what I can. So the big merger that is gonna be announced on the 15th, we'll see if it goes through, is Aphria and Tilray. Could be a binary play. It might not actually even move the stock for all we know. Aphria and Tilray could just hold 20, it could even drop, even with a merger going through. So when you take this trade, understand that Frugal Tiger is a drunk, bumbling idiot, and he's wrong all the time. The other trade that I'm watching right now is Viacom. Viacom, if you guys remember from Bill Huang's Archegos Capital that blew up, I talked about that 2 videos ago. basically, hidden wealth, man. He had a $30 billion bank account that he blew up on Viacom and Discovery and some other shit, man. But Viacom has crashed from $100 a share. It's now at $41.88. I don't, honestly, I actually had Viacom as a long-term position like a year ago at $12 a share. I flipped it at like $20 a share. Had I known it was gonna go to $100 a share, I would be, drinking champagne and eating caviar on camera, not drinking these cheap ass beers. With Viacom, I think it is potentially worth the trade, even though $42 a share is a pretty good value. Because they actually sold shares to the public recently, and public funds and pension funds and all of them bought shares at like $80 a share or something like that. And it's at $42 a share. And whenever something like that happens, a lot of fund managers feel pressure to reduce their cost basis. So what do I mean by this? Let me actually find the exact price Viacom. Yeah, they offered $20 million of common stock at $85 per share and $10 million of preferred stock at $100 per share. So there are a lot of funds out there that have purchased Viacom stock on this offering at $85 a share. But what was actually propping up Viacom was Bill Huang and his tremendous use of margin. So there are a lot of fund managers that basically purchased at $85 a share, and with the stock literally half of what it was a couple weeks back, they're now going to feel some pressure probably from their investors to reduce cost basis. So when they show their statements at the end of the quarter to their investors, they'll show that they purchased Viacom at $60 a share, not $85 a share. So it's a little bit of a window dressing thing that a lot of funds will do to make themselves look less foolish. And you as a trader can potentially take advantage of this, even though I think Viacom at $42 a share is still overpriced. It's actually probably worth the trade to buy here. Not even for a day trade, maybe hold it, let's see where it goes. You might get your, you might get stuck holding a bag of dicks, but that happens all the time when it comes to trading. No gamble, no future. So take a look at Viacom as a potential trade. In regards to earnings this upcoming week, so really quick, Monday we have Aphria. You have to watch that. That's marijuana. Please bid the price of Aphria up so I can get out and dump it on your face. Tuesday is Charles Schwab. Wednesday we have Bed Bath & Beyond, Wells Fargo, JP Morgan, and Goldman Sachs. On Thursday, we have Bank of America, Citibank, US Bank Corp, Delta Airlines, DAL, and Taiwan Semiconductor, potentially worth a long-term investment, Taiwan Semiconductor as well. We'll see how the earnings plays out. And then on Friday, we have Ally and Morgan Stanley. So that's your entire earnings, a lot of financials. So keep those things in mind. And I hope you guys stay safe, don't drink and drive, and I will see you next week. Hopefully you don't go broke by then. Thanks for tuning in. I will see you then. I just want the money.